Welcome everybody. Wow, it's been a while. Man, well, lots have changed, so we have a few things to talk about here. And for those who are new to my channel, my name is Peter. I am a mortgage banker by profession, and I'm also a vending machine operator, and I do a lot of different things as well. Um, anyway, guys, today I'm going to be talking a lot about where the market is, where do I think it's headed, and like I say all the time, I wish I had like a crystal ball for you guys and I could just tell you exactly what's happening, but I don't have that, and I don't think any of us do. But there's a lot of things that are definitely going on right now that's affecting the market in general. I mean, gee, we're seeing gas prices go up, interest rates are really high. The values of houses are still climbing in certain areas. In some areas, the prices have dropped. I don't know, but here in California, because I'm primarily in California, in Los Angeles County, the house prices are still very high. And I've seen rates ranging between low fives, high fives, some in the 6%, and there's some at even 7%. Yes, 7%. It's insane. Yes, it's very, very crazy right now what's going on with the market. I mean, you got people that are buying at this really high prices and really high interest rates. There's no indicator as to how much higher the prices of the house are going to go up. But I do know that the rates are, they're projected to keep going up. The feds have already raised the rates a few times now, a couple times actually, maybe even a few times already. So do we know where the market is headed? We don't know, nobody knows, but we can predict that it's somewhat approaching some kind of correction. I don't want to say crash because the word crash is stuck on people's heads and where it was back in 2008. And I've talked about this in my videos. Back then, remember, it was mortgage fraud. There was a lot of mortgage fraud. There was a lot of crazy lending practices that were happening that shouldn't have been happening. It drove up the prices really high, and people were buying houses that they could otherwise afford. Nowadays, everything is full docs. I mean, there's all the people that are buying right now are showing everything, their documents, their income, their 2 years W-2, their tax returns, their bank accounts. They're showing it all. So needless to say, a lot of the notes that are being written by the banks today are what they call performing notes because, the people can afford the house that they're buying. It's going to change. I mean, if it is going to change in a sense where the market's going to drop, it's because the sellers are going to soon find out that people cannot really afford to buy houses anymore, or should I say, more people are going to have a hard time getting approved on the loan. So that's going to cause the sellers to pretty much be a little bit looser on how they price their homes. And that is what could cause the market to slowly decline. Will that happen? Is it happening now? I don't know if it's going to full blown happen, but I'm kind of seeing it because there are some sellers that are pricing their home a little bit cheaper than what their value is, their true value of the property is. But today, I'm still seeing some bidding wars. I have a couple that are in escrow that are in a bidding war or was in a bidding war. I have borrowers that are still looking to buy a house and are still being outbidded on the properties that they're looking at, even at full asking price. And a lot of the realtors are going to be able to attest to this, that it's still happening. I know it's crazy, right? I mean, the rates are high. I mean, they're definitely high. Like I said, gee, I haven't seen 3%, 2% loans in a few months. And do I see it dropping anytime soon? In my opinion, no. So if you are in the market to buy a house and you can afford to buy a house, then buy a house. I mean, a lot of people have asked me, again, one of the biggest questions is it the right time to buy a house today? And my answer is always going to be, if you are ready to buy a house and you can afford the house and you are not putting yourself in a financial burden, then by all means buy your house. Because even if the market drops, if you are in your home long term, you're okay. I'll use myself as an example. I bought my house back in 2007, full market value. Then the house tanked, and after a year, because of the housing crisis, I lost easily about 300,000 of the value of my property. Fast forward 15, 16 years later, here we are. I have a lot of equity in the house. But again, every person's scenario is different. We're all not going to yield the same results. We're all not going to be able to yield the same, value or, stuff like that in our property, because it depends on your location, and where you end up. But nevertheless, if you are ready to buy a home, buy your home. If you are ready to sell your home and upgrade. Is equity still here? Yes, equity is still here. So if you have a lot of debt and you have your house and you have a lot of equity in your house and your debt load is really high because of your credit card debt, your car loans, your student loans, whatever debt it is, you might want to consider, while it's still available, to get some of your equity to lower your monthly cost of living. Guys, in this time, it's all about liquidity. A lot of people get stuck and married to their low interest rates, but on the other hand, they have credit card debt that's piled on so high that's consuming their savings every month. You might want to look at your options and see if you could free up some monthly obligations by doing that. And keep in mind, guys, and I've done this in another video, if you have a 3% home loan, but then you have a 21% or 18% credit card debt, and your monthly payment in your credit card debt is about $1,500 a month, and it's barely touching the balance of your credit card, you might want to look at your options, because keep in mind, a mortgage loan is not only a possible tax deduction, because I'm not a CPA, I'm not going to talk about that, but all you homeowners know the mortgage interest is a tax deduction. If you utilize your equity to pay off some debt and free up $1,000 a month, you can always pay yourself back that $1,000 a month, and guess what? Your 5.5% rate or your 5% rate or whatever rate you are paying on your home loan is going to yield a lower interest rate, because it's simple interest. If you guys have any questions about that, we could talk about that, or post it down below or email me down below or whatever you want to do. But you guys, equity is still available. Rates are high. It's going to go higher. I think it's going to keep going higher, but definitely equity is available. For all you homeowners that have a lot of equity, if you have a lot of debts, you might want to look into that and consider that, especially if it's saving you $500 or more a month. It doesn't make sense for you to keep a low interest home loan but not have any money, because if God forbid something happens to your job and you have no reserves, it could hit you even harder. So yeah, a lot of those questions come about. People always ask me, is the market gonna crash? The answer is, I don't know. Does it look like it could crash? Possible, yes. Look at the stock market, not doing well. Look at the gas prices, not doing well. So there is a chance, guys, but it's not gonna be because of mortgage fraud like what had happened 15, 16 years ago. So don't compare it as that. You guys, there's a lot of questions that are circling around. There's a lot of opinions going around, but the best advice you could get is from a person that's actually in the game. Your loan officer, me, you could ask me questions. You could ask your local realtor. Whatever it is, guys, get the true answers and get the true knowledge and don't guess. Anyway, guys, I just wanted to log in here and, get back with you guys. I hope this video kind of answered some questions and kind of helped out people with their questions. But whatever it is, guys, always be safe. Take care. And again, if you have any questions, post it down below. Email me down below. And please click like and subscribe. There's a subscribe button there somewhere around there. Anyway, guys, take care, and we'll be talking soon. See you later.